Welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, after a roughly 2-week break because we are still moving. As you can see, there's still some chaos going on. It's been a while since we had a stream, so we'll start off from here. And my portfolio didn't change very much. There are a few things I noticed that I'm unhappy about, but we're going to look into that in a second. Before we do that, however, I almost forgot. Let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, and the strategy I'm following are all linked in the video description down below. And the one thing I really recommend, if you haven't done so in the past, is go and check out the Elliott Wave Principle. You can read this wonderful book for free when you use the link in the description down below. And with that, we can actually jump into my portfolio, which is now this button, I guess. Yes, this button does the trick. So screens are different than before, so buttons are reconfigured. We can see we have a slightly red start into the day. Actually, we've been bleeding a little bit. I think we were up to almost 19,000. So I'm gonna check real quick. Our year-to-date performance is not gonna be that great. Year-to-date minus 9.39 after achieving more than 100% in 6 months or so last year. I think it's going to be fine in the long run, but we're going to have to take a look what's happening. So GameStop, first and foremost, this is the one where I bite my ass a little bit. We've had a bunch of episodes where I was talking about my January 17 $30 call options, and that eventually I rolled for February 28th $40 calls. And I rolled them for a debit, which means I paid a couple hundred to actually make that happen. When in fact, it turns out here's our top and now we're getting our corrections. So basically me not listening to my own advice is what made a huge difference, because if I would have not rolled those options, my calls would have expired worthless here, and I would have been able to write new calls already, which means instead of stretching out the period and giving back a couple hundred, I would have realized the full 2,800 profit here, and whatever we could get right now for writing again, I don't know, $35 calls or so. We will roll our GameStop calls, however, probably. Let's see. So February, we have to enable that. Okay, so February 28th, we can see is 32 days, and we already have the March 7 ones. So we probably will want to, once we get the prices, roll those out for a week, because the theta decay is, in quotes, the biggest in between 45 and 30 days or something like that, which means we actually stay in a sweet spot. We'll see in 1 minute, 8 seconds or so what premium we would get for that. As for the pattern, visually, I think we are going further down than I originally expected here. So it's possible that the entire correction ends here on the 50% retracement. It's possible that this is some form of 1, 2, 3, 4, 5, A, B, C, and now we're getting another push down, which means we would I would not be shocked if we temporarily go down even to here, 61.8 retracement would mark the minimum target, 2480, or maybe even the 78.6 retracement. So in other words, short term it could potentially go further down, but then we should get the next push up. So that's that. So we'll just have to wait and see how that plays out. Again, I kick my ass a little bit because it makes for this month probably a $2,000 difference in premium that I didn't stick with my original analysis and rolled the calls, but that's just how it goes sometimes. Overall, nice that I turned out to be right, not so nice that I didn't stick to my own analysis. Now, technically, which means this is wave 4, wave 5, which means our destination channel here looked actually like this. and we hit the median of the channel, which fulfills Kennedy channeling technique, which means I'm fairly certain that our labeling of these 5 waves here, we hit the minimum target for wave 5 and so on. So I'm fairly certain that this labeling here is accurate. Yeah? The ABC, no, that has to be accurate. Yeah? So, which means we are right now correcting those 5 waves. And while it's possible, I said that this is the turnaround point, I would not be shocked to see a push to 2480 or 2270 for A, B, and C before we go then further up. Yeah, which means now markets are open. We can check how much premium we would get. So if we buy back our $40 calls, strategy builder, buy back the 40 and sell the same 40 but a week later, what's the difference? So sell those. That should be for a credit. That actually should be, yeah, so $30 credit times 6, so we realize $180. So we're going to make that right now because we have a negative cash balance that we have to slowly wipe out as well. I know, so the issue is it's possible that we go up from here. Yeah, I mean, I know that's not much of a forecast. We could go up or we could go down, but basically we need a couple more days to either get a confirmation. It could be that this is A, B, C, so we go temporarily up and then we get the C push. So for the bigger A, B, C, it could be that somehow this is the entire correction. This is sort of the next wave, 1, 2, 3, 4, 5. So yeah, like I could roll it closer maybe even, but then for a lower strike price. So let's see if I, instead of rolling it out to March 7, if I actually roll it closer, the next one would be this week's. But there I would need to, I mean, here they are still for 40 to 74, so that we cannot do. We would need to roll in the money. February 17th. If I roll it for this week's 30s, yeah, we take out time. So we take out some time, but we still would not, we also would cap our profits again, which is what was the reason why I rolled it in the first place. And so that's not the smartest idea. And rolling it as said for March 7th would be the next one. Obviously, if we roll for the 30s, we get a decent credit, but that's not what we want to do. We want to stay in the 40s range here. So if credit gets smaller, probably because the price is falling a little bit. No, it's actually going up. How much would I want to roll them for another week? So technically, I would like to roll them for 2 weeks, but we don't have the March 14th option available until end of this week or early next week. I don't know when it gets added, so either this Friday or so we're not going to roll them today. Okay, so GameStop, we are fine with our position, even though it keeps affecting our portfolio hugely because it's the biggest position. But we're fine with the $40 calls, because if we go above 40 by here, we realize a decent profit on that trade, we get out of that position and we're good. Yeah. If not, so if we somehow get another push down here, then our options will expire worthless here when we are likely again on the upwards trench, which means we will be able to write new calls for better premium. So rolling right now for $200 doesn't seem the smart move. Yeah. What else do we have in our portfolio still? So we have our NEO April calls at 7, which we are covered calls because we have the shares against it. So NEO. Okay, there not much happened. We actually went lower again. We're getting into an area where it becomes a little tricky because we're now at the bottom of the base channel. We already now went through the 78.6 retracement. So and we would need to have a diagonal. Okay, so we'll have to reevaluate that. We will not manage to do that today, but I'm going to leave it like this with the error on the chart. We're going to do that probably then tomorrow. We'll have to look into that. Either this is a diagonal or I have a flaw in my labeling overall. That could be that the fifth wave is finished here and we're correcting the entire move. It could be that this is a diagonal. So there are a bunch of options we have to go through. Yeah. We'll hold our shares. It's just 100 shares for $400 something. So even if they're slightly at the loss right now, and obviously against those, we sold the $17 call, $7 call, because our minimum target, if our labeling would be correct, would have been at $7, so that we are okay if it goes higher and we get we lose the shares here. Yeah. We also might need, we're on a daily chart here, we might need 2, 3, 4, so like a week more to see if this turns out as an ABC pattern that's then followed by another decline, or if this actually turns out to be a stronger upward move for a 1, 2, 3 pattern. Yeah, so we're gonna look at that as well. Now, what's Novavax doing there? We already got out, unfortunately, because our options expired worthless here. I think there's so many aspects as that point towards we finished a free wave move and we're going up from here. Unfortunately, I got it wrong initially here, so that's why our options expired already. We don't have free cash to invest, so we're gonna ignore this one for now. And moving on, we still have, so we covered NEO, we have GameStop, Friday doesn't matter. Barnett, Barnes & Noble Education Inc. What are you doing there? Okay, there we also have 2 things on the chart. Possible correction finished, we're going up, or correction in progress. This part here is tricky to label. The first part here is perfect 5 waves followed by perfect 3 waves. So it should be followed by another 5 waves, but technically that could be 1, 2, 3, 4, 5, because we hit the minimum target, which means we are in a situation where this could just be A, B, C, and we're going further down, or where this could be 1, 2, and this is basically 1, 2, and now a strong wave 3 follows. Again, we don't have a huge position here either, so we're just gonna keep watching and holding for now. Immersion. There we recently broke an important level to the top, and then we actually broke it again to the bottom. Okay. Yeah, there we are a little bit in trouble, I would say. So our alert didn't trigger because we were not here, so we can cancel that alert. But basically we can see that we here went 8.12 and here we were only at 8.17, which means that this is not a free wave corrective move that turned around here as expected, although the trade would have been good if we entered here and used the trailing stop loss, so there would have been like 20% profit here. But somewhere we are wrong here as well. Nice, yeah. Moving on, NEO, we covered cost, the next on the list. Cost now broke the line to the bottom. Pity, here we were at 652. So also, okay, don't have the mindset for today, I'm sorry, to really dig into and relabel everything. So especially after 2 weeks of not following the charts, yeah, really not good that we broke that here. Here we have a bigger exposure, but it's also not the end of the world. So we have a $1,000 exposure here. We can see we're down 32%. Yeah, we'll have to relabel that and look at it multiple timeframes and whatnot. That's really tricky because it could be that this is a free wave move followed now by 1, 2, 1, 2, and we get a strong push down. Yeah. Yeah, like tricky. Technically, we would have to, or the worst case, we lose 80% in this investment. Yeah? So we have to consider that. Now, that actually covers everything we have stock-wise that's worth looking at. So we can actually look at the crypto side a little bit. Bitcoin, we haven't looked at for some time. Okay, we're still gonna hold. This looks on the daily chart like we have an impulsive move up. We have a free wave move down that already is recovering, so there should be more upside. I think we would sell if we roughly at 120,000, but we also will have to relabel this part. So, oh god, so much work waiting for us. Algorand is doing sideways things. Okay, interesting. I would already expect a further move up. I think we finished our correction here and we will go further up. So, but still, yeah, we'll also need to reevaluate. I know it's not very valuable if I say we have to reevaluate and this and that. H&T did something I did not expect because we last couple of weeks actually made this downward move. So while here it was still fine, this here is not so fine anymore. Well, now I have to consider that we are looking at a big corrective pattern here. And we can see that the basically target would be here, still another almost 50% drop for the end of the correction. So this would need to be 1, 2, 3, 4, 5, A, B, C, and then here we have our next in some form 1, 2, 3, 4, and then 5 push. Maybe even down here. Yeah, I don't hold that much HNT, so only what we earned with our hotspots, sorry, in the early days, but I'm gonna keep holding it for now. Storage, moving down. Here we reached the minimum target for potential 1, 2, 3, 4, 5. So it's kind of okay that we're now having. I thought we actually might have finished the correction here, but it looks like that's not the case. So this here is for this minimum target. There we don't need the 0% line anymore and the 100% line. And this here, we missed this minimum target here. Yeah, we also have to reevaluate that. Yeah, but it looks like we're basically in a. It's still possible that this is the end of the correction. This is an upward move, but visually this looks like a three-wave move. So if we go here, here, and here, we can see our profit target. So might still be more upside in there. XRP has been making another push. And surprisingly, I actually thought we would trade sideways further and get out of here. But we now also broke the 361.8 extension. Oh, there's so much to relabel. And what does XYO do? XYO has been, we're on a 4-hour chart, so probably need also to switch out to daily. Okay, daily is crazy. Okay, it also went lower. We now touched our base channel here. Okay, it's chaos everywhere. Yeah, like, okay, Nvidia has probably, most stocks have a red day. DJT, oh, that I did not expect. Yeah, I mean, we're not invested here, but I actually, did we reach a minimum target of some kind or so? 1, 2, 3, 4, 5 possible. Then we would be now retracing this entire thing. Or ABC. Okay, that's tricky here. That part's tricky, yeah. So I really thought we would go much higher here first. But I mean, to be fair, I've been saying this since here, so that we should go up. So there would have been a 30% profit or 25% profit using a trailing stop loss or so in it. But looks like we get some more downside here. Not that I'm invested, so again, no spare capital, and not that I like it. Nvidia also, there are a lot of things coming loose here, so. Not that it matters much for my portfolio. SPY is doing, or let's look XBX and have a sip. Here, let's switch on a weekly chart. So, okay, SPY is doing not much, just correcting a little. And the that's not the one we need. That one. Nasdaq futures. Just got a dip to the 38.2 retracement, almost on the dot. Oh, that would have been a nice pending order here. An instant 500 points. I don't know how much it further went up, yeah. Here we're on a daily chart, yeah, so not much changed here. So there it really, on the daily chart, if we go on a 3-day chart, we might visualize it better. But just looking on the small scale picture here, it looks still like we have some kind of 1, 2, 3, 4, and now we have 5 going on. Doesn't have to be, but it looks like there's still a push to come, yeah. And I think, I mean, I know that we didn't go a lot into detail today. Sorry for that, by the way. But I think that's it for today. So we'll definitely, during the next couple of live streams, especially depending on how much time I have. So I'm actually going to switch here. So depending on how much time I have for the streams, because as you see, there's still chaos. We still have to set up the studio, still have to arrange a bunch of other things and so on in the apartment and whatnot. Yeah. but we'll dive into things deeper in the near future. But yeah, for now, I'm kind of happy that GameStop in one way moved the way I've been praying or preaching for weeks. I'm unhappy with myself for then losing faith in my own analysis and to play it safe, rolling out the options. Again, it's like I don't know, like, so even right now, if we would have sold let's close the strategy builder, February 28, $40. Yeah, so I mean, premium probably was higher, but $40. I have to remove them. Sell $40 calls, yeah. So premium would be 57. So okay, it's a $300 difference, yeah, at the current price, or actually 300 plus the 300 we lost here. So it's a $600 difference for not believing in my own. Oh no, it's more because I could have sold them. I could have sold them on January 17th. So it technically is at least that one here comparable. So 350, yeah, 400 plus that, so 700. Yeah, it's not the end of the world. So it's a $700 mistake to not believe in my own analysis. I think long term it doesn't make a difference. Short term it obviously makes what's that then? 5% difference in portfolio value. But yeah, sorry guys, I forgot to share the screen now, so you just got to admire me. Anyway, that's it for today. I still hope you were able to take something away from today's stream, even if it's just that you should get and check out the Elliott Wave principle for yourself, so you can do your own analysis and maybe even share what you think with me. So we have some discussion about possible patterns. And yeah, with that, I am going to leave you to it and then see you all tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.